Hello, friends. Welcome back to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. We did it. We made a new all-time high for Bitcoin. We've been speaking about it since early September in our first video about a supply squeeze building in the underlying data. Strong hands were buying up corn and pushing us toward new prices. And lo and behold, we made it. We'll whip around the landscape on chain and check out the health of this rally. We'll look at the price chart. We'll look at profit taking. We'll check in with long-term holders. We'll look at the futures market. Everything that you want to look at, we will check on today. If you are enjoying the content on this channel, please give me a thumbs up and subscribe. Your support means everything to the growth of this channel. I've been overwhelmed by the positive response from this community, and we're just getting started. We've got a lot to talk about, so let's not waste any more time. What a fun day to start with the price chart, huh? When we spoke the other day on the 17th, we were hanging around in this area here around 61,000, and we were waiting to see if we got an all-time high break. And man, did we get that. At the moment here on October 21st, at the time of recording, we're testing the all-time high. This is the previous level from April. Here, if we zoom out, you can see this was the high here on April 14th on the day Coinbase debuted. And we've been testing this level here, which we've done on all previous all-time high breakouts for Bitcoin. It has tested the previous high at least once. So gathering support here is normal, it's expected, and frankly, it's healthy. If we hop over to the daily chart, still got a couple of these trend lines drawn. This was the trend line that started back in 2020. We're still holding this line. We've actually gotten back above it here. This line that acted as a ceiling in August and September as we were looking for strength out of the bottom of the summer bear. We've now gotten back over this line, and here I drew a more aggressive one here that we were seeming to hold throughout the month of October, and we're still holding that line as well. No notable selling wicks have broken underneath this line, even though we broke out from the all-time high and have come back to test it. So there's currently a lot of strong trending support on the price chart. And if we're thinking about where this market could go, we hop over here to the all-time history, we can see what the percentage gains were for each time that we broke the previous all-time high. All of these numbers are very large. 2013, 740%. In late 2013, 338%. In 2017, 1,580%. And in 2020 and 21, we got a 227% break over the previous all-time high. So looking at all this together here, what can we glean from this? Well, every all-time high break has been aggressive. If we were to expect at minimum just a 200% gain from where we are now, that would put us around $212,000. But what if we got a double move like we did here in 2013 and 14, where the second move was only about 50% of the previous move? Okay, well then let's do that over here. Let's say we only get 110% off of this market. Where does that put us? 136,000. So we've got a couple of possible things to look for here, a couple of possible targets. These are not guaranteed targets. I would not place trades based on this information because this is not complete TA. But if we're just kind of loosely expecting Bitcoin to have rhyming history, as it often does, then we could think maybe mid-100,000s, or in a very aggressive market, maybe we get to 200,000. I don't know how realistic these are, but they're things to keep in the very back of my mind. From where we are here, if we were to only go to $100,000, which is kind of like a line in the sand for a lot of people, we're only looking at a 53% move from here, which would be a quarter of the move, less than a quarter of the move from earlier this year, and it would be different from all previous runs. So if we're thinking that Bitcoin is going to start behaving differently this year, maybe we only get this 53% here. I don't actually know. But either way, I have a lot of confidence that we're going to at least get to this level. It would seem strange to me for us to spend many months accumulating like we did to see so much on-chain strength like we have, only for it to peter out after just 20 or 30% above the all-time high. That just doesn't seem plausible to me. So from a price chart perspective, we're looking strong, we're holding trend line support, and it seems by my estimation that we still have plenty of room to run. So let's hop on over to the on-chain and derivatives space. We have a lot to look at today, so I've combined a few of our charts into a dashboard so that we can go through them a bit more quickly. Right now, we're looking at the derivative space. This week, the first futures-based ETF went live, and we've seen a lot of volume taking place Here is the futures open interest for the perpetual market, the one with the funding rate that we watch so closely. Here it is in US dollar terms, and you can see that the open interest, the amount of open contracts currently in the futures market, is near the all-time high in dollar amount and has been escalating dramatically in the month of October. As interest comes back into the market, new highs are created, which creates euphoria, and the increased volume and interest from the futures ETF that launched 3 days ago. All of this is culminating in extremely high volumes and a lot more eyeballs on the futures space. So it's growing dramatically, but price is continuing to go up with it. If we look over here to the right is the same chart, but rather than being in US dollar terms, it's in Bitcoin denomination. So this is BTC, this is USD. And what I've found interesting, the reason I put these next to each other was, when you strip away the dollar amount, Checkmate pointed this out to me. As price goes up, the amount of BTC in open contracts changes in value. So when we strip away those dollars and see it just in raw units, we get an idea of what's entering and leaving futures. And something that's interesting here is just how this amount of Bitcoin has been pretty static for most of the year, as we've hung out in mostly the same price range. We're between 150 and 200,000 Bitcoin for most of the year here, right around 200,000 Bitcoin. As we've gotten back up into the 60Ks, we haven't seen the amount of Bitcoin in futures really dramatically increase from where it's been most of the year. It's just that the dollar value of the corn in these contracts is going up. Will we see this grow and create new highs in the next few weeks? That's very possible. Futures are only going to grow more bustling. The markets will only get larger. And right now, it's at an all-time high in dollar value. When we carry this over to the funding rate, which if you'll recall is the barometer for bias and leverage in these open contracts. When we see the funding rate over here, there is a spike, but it's nowhere near these levels from the spring. And if we zoom in, you can see how aggressively the funding rate increased as we got to the all-time high. I'll zoom in even more. The funding rate went up dramatically here on the 20th as we finally created new highs on this push up, and it's kind of elevated and maintained a higher funding rate up here around 0.04%. A high funding rate by itself is not a cause for concern. If prices are rising here, as open interest is rising here, and the funding rate is maintaining a steady positive rate. It did increase, but it's been holding steady for the last couple days. That can be okay. That could simply mean that longs are paying a premium, and that is just the cost of doing business. If everyone is bullish and price is continuing to rise, then there isn't really a concern. The issues arise when you see price diverging from the activity in the futures market. So if this started to spike dramatically while price was staying flat, or if we suddenly saw a dramatic increase in futures contract volume, open interest volume, while price was just hanging around in the same area and funding shifted dramatically at the same time, that would be a divergence, and it would be something we would be more concerned about and more keen to watch closely. That isn't to say we might not see liquidations. We very well could see a few, but at the moment, based on the health of the derivatives market, the way it looks, it seems as if a positive rate is simply the cost of doing business right now. Futures can change quickly, so what I'm saying now might not be true 12 hours from now. But current assessment of the market is that this looks healthy, it looks robust, interest is increasing, and right now funding has stayed steadily positive. We'll continue to look for a divergence. This is the net realized profit and loss chart. When we create new highs, one of the things that I like to look at first is profit taking. Who is selling here? Is there anyone who was waiting for new prices that has now gotten them, that is taking action? This is the total dollar value of net realized PnL on a day-to-day basis. So it's all the realized profit minus all the realized loss. And the reason I brought it up here was because I was comparing current profit taking levels to the previous bull run. And this level that we're at right here, this kind of $2.5–3 billion of realized profit, if you carry your eyes over to the previous market, this is a similar area to the profit taking that we had when price was down here around 20K. So here's when it broke the previous all-time high. This spot right here, it hesitated. There was price resistance in this area. It chopped around, and then as it broke over, profits started being realized in spikes. And you can see this area of profit taking, of net realized profit, is similar to the net realized profit here, but price is more than 100% higher than it was back here, which means that in total, the dollar amount of profit taking at nearly 3 times the price, actually. This back here was at 23,000. We're now at 65,000. We're 160, 170% away from this level, and the dollar amount of net profit taking is about the same. We haven't seen any of these big spikes up into the $4 and $5 billion range. I imagine we will very soon, but I found this interesting that on the day we finally created new highs, net realized profit taking was still on the lower end compared to what kind of profit is sitting unrealized on the network right now. This really just speaks to patience and confidence among holders. They don't seem quite ready to let go of their coins, but I imagine that will start to change soon. Here is our spent volume age bands, and as many of you are familiar, it is filtered down to only show coins that are 6 months or older. So this is the volume of spent coins, the relative volume of all of the day's volume that is taken up by coins that are 6 months or older. If you look here in bull runs, these values tend to spike as older coins are realizing profits into market strength. The constant tug of war back and forth between young and old hands, selling into market strength, finding new buyers. Some of those buyers then become hodlers for the next cycle. What I've noticed here in the last few days, we've had a small spike of old coin activity. You see this? It's still pretty low. If I zoom back out, it's still pretty low, but it's a spike, and it's something we'll watch over the next few days. If we really dig in and we start to try to figure out, okay, what's the makeup of this spike right here? 6 to 12 month coins, it looks like just a little slice on the top. You can see 1 to 2 year makes up a good chunk of this spike, and so do 2 to 3 year coins. 3 to 5 on the smaller side. All right, so it's not 5 to 7. They're not 7 to 10. They're not over 10 years old. This spike is coins from 1 to 5 years old, and it's still a very small percentage of daily volume. We're talking about low single digits, 2%, 3% of daily volume. Not an alarming amount. This spike is mostly coins 1 to 5 years old. There are a few that are 6 to 12 months old, and this is the kind of activity we've known that was coming. We've talked about this for a couple of months now on this channel, that when we get to new prices, older hands will start to sell coins. And the important factor is whether they're selling enough of them to flood the market. It doesn't yet look that way, but this dynamic is what was expected, and it's important to watch it day to day as we're entering this price discovery phase of the bull run. So this is one perspective of older coins. There's another cohort that we talk about a lot, the long-term holders. So let's look at what they are up to. Here's another dashboard that combines a bunch of our long-term holder and coin activity charts together so we can look at them all at once. This here in the top left is our long-term holder supply. We've been watching this most of the year as they've been in heavy accumulation mode since March. Long-term holders are entities that have held their coins for a long enough time that we consider them unlikely to sell. The times when this group tends to come to life are when we're making new highs. They sell into market strength and they spend the rest of the year accumulating once price rolls over. While this group's been going up most of the year, just recently we noticed a slight downtick in their supply here. And over the last couple of days, long-term holders have sold about 39,000 coins, 38,000 coins. Not a huge amount. And we can see that they've actually had some other distribution events along this rally. There was one here in July, another one here in July. So these happen. And this is just one little tick. So we need to watch this and see if this becomes a swift downturn or if it's just another hitch in the road as they continue to accumulate. My expectation is that this curl is the beginning of a downtrend in long-term holder supply. This trend will begin to soften, as it always does. If we pull up long-term holder supply all time here, you can see that their supply goes up and tends to stay up in bear cycles. And then as we break the previous high, they begin distributing. This happens in every market cycle, and I believe that we are currently looking at this trend beginning here as we've created new highs. And as price continues to go up, the distribution of long-term holders will likewise aggressively begin to distribute down. This little spike here can be seen in the converse of short-term holder supply over here. You see this little spike up? They have absorbed those coins. Someone bought them off of these folks and now own them. Some of these coins will mature and eventually rejoin this group, but that won't happen for another 5 or 6 months. Moving down the list here, this is long-term holder net position change. This is the 30-day rolling change of this metric here. When this is in the green, long-term holders are net accumulating. When it's in the red, they are net distributing. See here, since about February, this group has been rising. Their accumulation was growing. It's held steady for most of the summer here. This level has kind of flattened out, which meant that on a rolling 30-day basis, their accumulation level held very steady. The rate of change of this line also held steady. Recently, this has begun to decline downwards. You see this? Just a slight softening of this. That goes to show this metric here. The rate of change of this line is beginning to smooth out. It's not going up quite as quickly here. That's where we start to see this softening here. And now we've gotten a dip in long-term holder supply. Let me zoom in. Now we've gotten this little dip right in line with this little dip here. So long-term holders still net accumulating, still net growing, but they have begun to distribute. And this will become more aggressive and more pronounced if price continues to go up. So we'll be watching this chart closely. We shift our eyes to the right here. This is the spent output profit ratio of long-term holders, SOPR. So every time one of them spends a coin, it has a profit ratio of some kind, and it shows up here on this line. If they continue to hold, they will not show up here on SOPR. They will just continue to be part of supply up here. But when they spend these coins and coins leave long-term holder supply, they show up here. And something that I've picked up from this, one of my observations, is that the spent profit ratio of long-term holders is almost exactly where it was when price was breaking the previous all-time high. Here we are, about 2.5 spent profit ratio. If we follow this back over, this was where we were when we were breaking the previous all-time high in December. We were consolidating here under this $19,000 level before finally breaking out. And this profit level here, I'm putting my cursor on it. If you follow this horizontal line straight across, it's exactly where we are. Profit taking is where we expect. It is in tune with its historical trend, and they're behaving exactly as we expect them to. This is a very positive sign for the diagnosis for the rest of this rally, for the potential for it to reach its zenith. But moving down to the last row of our dash here, we're looking at revived supply. Revived supply represents coins that were spent on a given day that had not been moved in a certain amount of time previous. We've got revived supply from 1 year, 2 years, and 3 years ago. So when you see a print on this purple chart here, these are coins that didn't move for at least a year before this date. You can see here on October 19th and 20th, we've had a spike in revived supply from a year ago. If we follow this a little deeper down the rabbit hole, these are coins now from 2 years ago. Same spot, same spike, quite a bit smaller. If you see the axis over here, 25,000 coins. That's what this broke. This was about, 33.9 thousand coins. Over here on revived supply 2 years ago, it's showing 16,000 coins, which means that about half of the coins, the older coins that were spent in this rally, ones that left this group here in long-term holder supply, about half of them were from 6 months to a year ago, and the other half were at least 2 years old. We can tell that because this is 33.9 thousand coins, and over here, this is 16.9 thousand, almost half. And then if you look over here at 3 years ago, this spike is almost not even there. The conclusion from looking at these charts is that we had a bit of coin leave long-term holder supply. We can see that here, the distribution softening. Some of it joined short-term holder supply. Their profit taking is on par from the time we broke the previous all-time high in December of last year. And the coins that were on the move appear to be between 1 year old and 2 years old, which is on par with what we noticed in the spent volume age bands. We noticed that most of these coins moving were 6 months to a year or two old. And we're seeing that now manifested over here in the revived supply charts. So I've been bouncing around a lot. We looked at a bunch of charts there. I hope y'all are still with me here. I know we're moving quickly, but there's just so much to cover when we break the all-time high. There are a lot of things we need to look at to get our assessment of the market. This is the 90-day coin days destroyed chart we talked about in the previous video, when we noted that old coin activity seemed to be very low historically compared to the times we've broken the all-time high in the past. We just went through this whole process looking at long-term holders with a slight distribution event, finding out where these coins came from. They were 6 months to 2 years old, but it was a very small percentage of their supply, right? We know this. It's almost not even registering on the greater trend of long-term holder supply. So when we come back over here to look at coin days destroyed, which is the activity of old coins being moved each day, it's still very low, historically low. Every previous time in Bitcoin's history, when it broke the all-time high, the amount of older coin activity registered on this chart was much higher than where it is now. Let's just look at a couple of the previous markets. Here's the 2011 top, right? Let's follow this across. Here's where we created new highs. Look at where the orange line is under my cursor. This is the amount of old coins being churned and given to new buyers. Remember that when a coin sits dormant, it accrues coin days for each day that it sits dormant. And when it is spent and given to another buyer, all of those coin days are destroyed. It's a way of logging how much time it sat still. And then when you add up a bunch of coins moving, it's a way to see older coins and the volume and age of them moving at a point in time. So when we get new prices and blow off tops, we get an acceleration of old coins and a number of them, a large number of old coins all being moved together. And you create these large spikes of many coins with many days accrued in them all being destroyed at once. So 2011, we break the all-time high. Coin days destroyed is all the way up here. 2013, we break the first all-time high here in this double move. Look at this. We're all the way up here. Coin day destroyed activity is all the way up here. We make this top in 2014, long bear market. We come back up, and as we're breaking it right here, Coinday's destroyed activity is very elevated, well out of this blue basin, all the way up here. We create a new top, multi-year bear. We come back up to break the previous all-time high. We're right here. Where is Coinday's destroyed activity? It's right here. It's elevated. It isn't as elevated as the previous market, but it's much higher than the baseline. It is much higher than accumulation mode, all the way up here. We create a new high. We go into multi-month accumulation. We're back up to the all-time high, baby. Where is Coinday's destroyed 90? It is all the way down here. What are we learning from this? Old hands are not moving their coins. The ones who are a tiny, insignificant fraction of the supply held by old hands. And they're an insignificant portion of the total amount of coin days that are eligible to be destroyed by these old hands. This tells us that much of what is moving is still newer coins. They still dominate the volume each day. I would expect this value to be well up here at this stage, to have been increasing dramatically, but it remains very low. I mean, it hasn't moved really at all. It was at a higher point in August. But what this is telling me is that we just created new all-time highs, and the active sell pressure on chain is a far cry from what it has been historically. This could change quickly. We might start seeing, if we get to 70,000 or 75,000, maybe we see a quick burst of old coin activity that renders this trend a little moot. Maybe all of a sudden this spikes up to here if we suddenly get another rip in price. That's fine. This won't be a red flag to see this value go up, but it's remarkable, and in fact I would call it a green flag that it's so low. The last chart we'll touch on today is the smart money chart, which we've looked at a few times. We've got 3 lines on here. The orange line is the balance held by whales. These are individual entities on chain that have at least 1,000 Bitcoin in their possession. The blue line represents the illiquid supply shock, which represents hodlers. These are people who have a low history of selling. They tend to hold on to at least 75% or more of their Bitcoin lifetime. And also I've thrown in exchange balances here in green. So the takeaways from this chart. First of all, whales have held up, and in this rally have actually grown their stacks by a little more than 30,000 Bitcoin. Also, the supply by hodlers continues to trend up. They continue to absorb more of the supply. More and more corn is ending up in the hands of people who do not have a desire to sell them. And by this value going up, this also means these coins are not on exchanges. These are in cold storage, which means that there is a friction between their current possession and the ability to sell them. It's also interesting to note that in the last few days, as we've been breaking out and setting new highs, exchange balances have stayed mostly flat with a slight downtrend. Coins are actually being taken away rather than being put on there for sale. We would expect with new prices that this value would spike up. The fact that it hasn't yet is very encouraging. So this is very positive. Whales are holding up and in fact have grown a bit recently. Illiquid supply, the hodlers, are growing their stacks, and exchanges have seen a slight downtrend after remaining flat. Old coin activity remains quite low compared to historical trends. Long-term holders have distributed a small amount of coins, but their profit-taking level is exactly where we would expect it to be. And some of those coins that moved seem to be from 6 months to 2 years ago, but they're a small amount of coins. Generally, old coin volume is still on the lower end of daily volume, but it is increasing slightly and worth watching over the next few days. Despite that, realized profit taking overall is not much higher than where it was the last time we broke the all-time high, when price was less than half of what it is now, really emphasizing just how quiet the market is at these new prices. We didn't have a bunch of people waiting at the finish line to dump their holdings at 65,000. This all feels very positive to me, and it'll be important over the next few days that these trends continue to speak of strength in the market. If we see long-term holders quickly distributing, when we haven't yet seen retail demand rushing in, as long as these profit-taking trends remain on par with historical values, we can expect that this rally will continue to build in strength. Mitigating factors for us are whether or not the futures market comes into play, as we've seen open interest rising almost to all-time highs in dollar value, though not all-time highs in Bitcoin value. We are seeing an elevated, maintained, positive funding rate, which opens the door for some vulnerability if price has a short-term correction. But those things are not unhealthy for the market. The rally looks strong. The trends we've been watching for the last 2 months are all intact, and the supply squeeze is playing out in front of you. Hodlers are doing hodler things, and we have now created an all-time high for Bitcoin. I anticipate many more days of all-time highs in the next couple months. Let's hope that I am correct and that our thesis plays out. But of course, if any data comes up to challenge our beliefs, we will have to analyze it and take it into account. This channel is about objective, fair analysis of the Bitcoin on-chain landscape. I'm not here to sell you hopium, but when things look good, I'm going to tell you. And right now, the rally looks very strong. I want to point out this article that I published on glassnode.com a couple weeks ago that is a deep dive into the behavior of long-term holders. We've gone through much of this on the channel, but if you'd like some supplemental reading with a couple of newer charts that we haven't looked at together, I'll leave a link for this in the description. As we sit here at all-time highs, the behavior of long-term holders is something very important to understand and to watch. So I highly recommend those curious take a moment to read this article. Make sure you follow me on Twitter at TXMCTrades. Things happen quickly in a bull run, and the way to stay on top of it is to follow me on Twitter, where I post in-the-moment analysis every day. Please leave feedback and questions in the comments. I read and respond to all of them. And make sure you share this content with any of your friends who are curious about Bitcoin. The more people we can orange pill and bring into our approach of balanced analysis, the better off this market will be. We'll look to put out another video this weekend and check back in with the rally. Until then, keep a level head, friends. You weathered an entire summer of uncertainty and FUD. Don't let it go to waste by selling your Bitcoin now, when we've just gotten to the fun part. We will watch the data closely, and when it starts to look like a top is being put in, believe me, I'll be one of the first to tell you what I see. And barring any surprises, on-chain should be able to tell us those things. Until next time, have a great week. We'll speak again soon. Cheers.